The Agweek Market Wrap is sponsored by Gateway Building Systems.
Welcome to the Agweek Market Wrap, brought to you by Gateway Building Systems. I'm Don Wick from the Red River Farm Network, and as always, our guest is Randy Martinson, who is with, of course, Martinson Ag Risk Management. Another crazy week here, Randy, as we look at it. Early in the week, it looked like all the funds were trying to find the exit. Later in the week, we had a bit of a recovery. What's the story? What was happening in this trade this week?
You know, a lot of it focused on weather. You know, we've been gotten beat up pretty bad. I mean, these markets were trading down to some severely low levels, and we were looking at being oversold. All that the market stuff that comes with we went up too much. Of course, we have to overdo it on the downside. So we were seeing a market that was extremely oversold and in need of a correction. Well, then you throw in a little bit of weather concerns, and that really kind of helped spark things here towards the end of the week. And right now, we're looking at what was expected to be a little bit wetter, warmer forecast is now all of a sudden a little warmer and a little drier, with the corn going into pollination, and that got the funds coming back into the market pretty strong.
As you take a look at the specs that have been in the marketplace, there's certainly a big influence. You can see this with the moves that we have in a trade like we've had this past week.
Oh, most definitely. I mean, you could see that definitely, like you said, the funds were bailing, the speculators were getting out of the market. I think there was some, economic concerns, and there was some money being flowed back into maybe, cure some ails that were going on in the stock market. And, we just had, what looked like it was going to be an old-fashioned, market beating taking place. But, we did find some stability. And again, the market, I think, went back and started looking at, okay, we need these acres, we need the bushels, we need the, because of the tight supplies around the world. Russia and Ukraine still aren't playing very nice, as, everybody's seen the pictures on Twitter of the wheat field burning up because with the helicopter flying over it, bombing it, so things like that kind of add a little bit more credence to the fact that we need to get every bushel as far as the U.S. is concerned, to get in and feed the world. And right now, the market, I think, kind of forgot that for a little while, and now is starting to remember it.
Yeah, Randy, you talk about the Ukraine, Russia situation. You've got the resignation of the prime minister in England. We're dealing with Dutch farmers in the midst of massive protests going on there. The former prime minister in Japan passing. There's just so much uncertainty, volatility in the news that we're seeing. How does that play into really concerns about what's going on with the global economy and some of the other anxieties that are out there?
That's a good question, and markets don't like uncertainty. They normally traders seem to run for the door when a lot of uncertainty comes into a marketplace, because they like things a little more, sure, a little more stable. And we've had a lot of uncertainty in the last, year and a half, actually. And ever since Russia, invaded Ukraine, it's really amped up the world concerns. And with the Japanese, that's going to add a little more flavor to it. They're a good partner of ours. Is this going to strain some, relationships? And there's a lot of unknowns that are out there. And right now, one of the biggest for us is just whether or not we're going to have favorable weather to continue to see our crop advancing. And that's really, I think, what the marketplace looked at.
Yeah, no doubt. The U.S. dollar remains strong, and that doesn't help us in the export world. Export reports this week were pretty ugly.
Second week in a row where we saw cancellations in soybeans. First time we saw cancellations on a weekly basis. Net sales for corn. Wheat continues to lag. So yeah, we're really not very competitive on the world market. And earlier in the week, the news was breaking that our wheat market had dropped enough. We were starting to become competitive in the world market. Well, then Russia comes in and they change how they figure their export tax for their wheat, and it looks like they're going to have a big crop. They're basically dumping their wheat on the market to anybody that would be willing to buy it. So that is still a little bit of competition for us. But our exports continue to be a little bit poor, and I think we won't see those improve until we start getting into our new crop corn and soybean harvest.
We're this far into the conversation. We haven't even mentioned, we got a crop report, supply demand numbers coming out on Tuesday. What's the trade looking for in this report?
Well, we do know that, by taking the June 30th numbers that came out, we're going to see lower stocks as far as soybeans are concerned. We got 2 million less acres. So we know we're going to be somewhere in the area of about 100 million bushels less on our ending stocks estimate for soybeans. That's going to be somewhat friendly. There'll be some other movements in there, of course. And USDA, I don't think will come in and increase yield at this point because the conditions really haven't shown that great of an improvement. For corn, I would expect that we are going to see a flat number, close to what has been expected already. And in wheat, we might see a little bit friendly number too, a little tighter stocks. But overall, everybody's going to be focusing on that bean number because that is going to get trimmed quite a bit in this report.
Well, so much volatility this week. How does the farmer protect himself in a marketplace like this that's going up and down?
Oh boy, that's a good question. I mean, right now, especially this week, with as much volatility we've got into the market, we finally started to see options become a little bit more feasible to start purchasing because a lot of the premium had been pulled out of them. But again, with the market rallying, so we've had some customers come in and cover with some call options on some sales they've made. I've told guys be patient. This market has been beat up pretty bad. We should see a recovery. Right now, we're in the midst of a pretty good sized recovery in all three of the markets. I think there's a little bit more room to move, especially if we get verification of the weather on Monday. But I think rallies on this point are going to be for selling, not for buying the crop.
If I could switch gears just quickly over to the livestock side of the page, this cattle market, cash cattle market, continues to hold in there.
It does. I mean, it's actually been kind of good to see the cash side of it hold on. I know, we've seen the futures market kind of struggle this week again. Again, more economic concerns than there is actually production concerns. They're talking about the fourth quarter production being lower, and that's supportive to the cattle market. The big thing is we need to keep domestic demand going and being firm. And right now, that's going to be the big question. With the cash market holding in there, it tells us that we've got a chance to continue to see domestic demand, which I think is going to help drive this market forward.
Well, again, to reiterate, when we come back Sunday night into the trade, weather's going to be the big driver, I'm guessing.
Weather is going to be the big one right now, especially, since we're getting the corn going into pollination stage, into the pollination side. We're looking at the report on Thursday. All that is going to kind of come in and drive the market next week.
Good deal. Randy Martinson with us from Martinson Ag Risk Management. Of course, for markets, market analysis throughout the week, you can tune into your local Red River Farm Network radio affiliate or find our information online at rrfn.com. The Agweek Market Wrap is sponsored by Gateway Building Systems. I'm Don Wick.